Since the past few days, the notification released by the Finance Ministry about the 20% tax collection at source rate on international credit card spending has faced a lot of disapproval and dissatisfaction from the citizens as they took to Twitter to ask the government various questions regarding the tax. On Thursday, the Finance Ministry released a series of frequently asked questions regarding the TCS made on foreign remittances made through the LRS, that is the Liberalized Remittance Scheme. The Liberalized Remittance Scheme permits all individuals, including minors, to easily transfer $250,000 for any permissible current or capital account transaction or a combination thereof. The Finance Ministry has released a series of frequently asked questions just a day after making these changes to the Foreign Exchange Management Current Account Transactions rules to provide insights into the rationale behind incorporating foreign expenditure made via credit cards. The government made it clear that the tax collection at source is not applicable to all the remittances abroad. Only the remittances that fall under the scope of the LRS are subjected to the tax collection at source. The increase in the rate of the tax collected at source can be attributed to various reasons. The tax collected at source is not a final payment. If the TCS payee is a taxpayer, they have the option to claim credit for the TCS amount as tax payment against their regular income. This allows them in advance to adjust it against advance tax payments and other liabilities. For individuals who are not taxpayers, 20% on the presumed income is not excessively high. Under the new tax regime, the tax rate slab of 20% applies to income over Rs 12 lakhs, while the rate is 30% for incomes over 15 lakhs. Moreover, there are absolutely no changes in the treatment of educational and medical expenses. The impact primarily affects investment in assets such as real estate, bonds, stocks outside of India by high net worth individuals, as well as tour travel packages and gifts to non-residents. It is expected that individuals remitting funds from their own sources are generally higher income taxpayers. However, a concessional rate of 0.5% has been provided to those who remit through institutional loans for educational purposes. Regarding travel and incidental expenses related to education and medical reasons, the TCS rate that is applicable for remittances of education and medical treatment will continue to apply. A separate clarification will be issued to provide more details on this matter. In the meantime, it is important to note that spending in foreign exchange made through international credit cards will be covered under the Reserve Bank of India's LRS scheme. As per a notification from the Finance Ministry, residents are allowed to remit money up to $250,000 without requiring a permit from the Reserve Bank of India. However, any remittance exceeding this limit or its equivalent in the foreign currency will require prior approval from the Reserve Bank of India.